A really appropriate place to start, I think, is in all of the corporate and other promises to support Black businesses and other underrepresented businesses that have come over the past couple of years. Taking that into account, guys, each of you, let me know what's your current what's your current view, pardon me, of the state of VC funding for these underrepresented founders? Let's start with you, Miriam.
So we've seen many billions of dollars being committed to these areas. I think one difference is that some of that is being committed for philanthropic purposes and some for venture capital. So it's unclear what percentage went for which purpose and how much funding has actually reached African American and BIPOC founders. So that would be one of the things that I kind of challenge, which is let's hear the other side of the story apart from the commitments.
Mm-hmm. What about you, Bahiyah?
Yeah, I mean, I would just add to that, you know, when George Floyd kind of sparked this global reaction to, and really a reckoning around how we invest and who's brought to the table, a lot of the corporations, as we know, kind of came to and said, you know, we just want to do something, right? We want to commit $1 billion, we want to commit $500 million. But there was no real strategy behind that. And so where the commitment was great, what we, I think, saw, or at least what I saw, was a lot of questioning about now what? How do we actually deploy capital? What kind of capital is going to what type of markets or what type of regions, right? And so there was a bit of a scramble, and I definitely was on the side of, you know, calls that said, you know, what should we do now? And I said, you have $1 billion, like, you know, we should probably work together to kind of figure out where we can have a multi-phased approach to deploy capital in a very responsible and holistic way. And so the theme of, you know, VC Include is making sure there's an education component on the asset management side as well as the asset allocator side. And there's also investment, right? So you can't just have mentorship and education without investment hand in hand. And so I think we're in the first phase of some of the deployment of that capital, and it's going to be very exciting to see that next phase of capital being deployed out of that larger pool that's been committed.
Absolutely. And KJ, from your perspective, tell us what you're seeing.
Yeah, totally. I mean, I would certainly echo a lot of the sentiments that have been shared up to date. And personally, I hold both optimism and skepticism as it relates to the promises, particularly in the face of corporations relative to these types of circumstances and the deployment or the initiatives of capital. I would say from the VC perspective, where I belong as a member of the team at Forerunner, our commitment has always been to the deployment of capital and actually putting capital, finances, money, resources into the hands of founders, you know, ideally diverse. And I think that's what it takes to kind of move the needle, because there's a very thin line between actually being able to promise and this kind of notion of diversity theater in which promises are made but aren't enforced. And while I love the intentionality, as been mentioned before, I think what's important is to really have deliberate steps, like an action plan against it, so that you make sure that you're holding yourself accountable and that there's actually durability and longstanding promise to some of these guarantees that are being made at this point.
Absolutely. Guys, I think that's a great baseline, because now I'm going to throw a few numbers at you that I want you to think about. Investments in Black founders, they quadrupled in the first half of 2021, reaching $1.8 billion. This is according to Crunchbase. And the same report showed that U.S. startups for Latino founders received just 2.1% of venture capital funding in 2021. And it was a VC funding banner year, but women received just 2% of all VC investment. But Miriam, the numbers don't really tell the whole story, right? So can you contextualize them for me?
So one of the ways to think about it is that this was a record-breaking cycle for venture capital. So the 2% is a big number in terms of dollars, but it's really a tiny percentage. It's also a tiny percent when you think, for example, that women are actually more educated than men at both the undergraduate and the master's degree level, and that they represent a huge part of the workforce, and we still don't fund even women. And I will say that we're really talking still about majority women, white women. And so From our point of view at Ulu Ventures, almost half of our teams have a woman on the team, which makes sense. And about a quarter of our CEOs are African American and Latino. Our funds are really successful, top 5, top quartile funds. And I think the mythology around pipeline continues to make people avoid investments that would be very profitable.
Bahiyah, I can see you shaking your head. So let us know what you're thinking. What's going on in there?
Yeah, I think when you go, so that's the kind of ground level numbers and the correlation. And then when you start to think about, again, up the funnel, then you look at the fund manager layer, the asset manager layer, and we see that 1.4% of now $80 trillion in AUM that's managed in the US alone is managed by women and people of color combined, right? And so it continues to kind of track to those numbers, 1 to 2% of investments made at the founder level, you know, right in that kind of 1 to 2% of asset managers that are represented both women and people of color. And so, you know, again, back to the holistic approach has to be both on the ground in terms of the investment, but also at the asset manager level. And that's really where we focus, is making sure inclusion is infused at the asset manager level around venture capital, around kind of ESG, right? Making sure that environmental and social governance is embedded at the fund manager level as well as the founder level. And so I think it's really important, again, to kind of have that holistic strategy and understand those numbers at the ground level and what's actually causing a lot of that correlation.
Mm-hmm. Absolutely. KJ, I want to ask you another question, a different one.
Sure.
Now, we pulled the Twitterverse ahead of this, and we wanted to ask what was the biggest challenge facing underrepresented founders. I'll let you know the results. You let me know what you think of them, if they really do seem this way from your corner of the world.
Sure.
Unconscious bias got about 35%, close to 35%. Lack of access to capital was 50.5%. I always hear that as the reason. But sexism and ageism came in at 14.7%. Does that sound like what you're seeing currently? And if not, what would you see as the biggest challenge facing underrepresented founders?
Yeah, I mean, I think for the most part that tracks, right? I think VC historically has been an ecosystem in which pattern recognition is something that's celebrated, right? You see success that translates in one arena, you work to duplicate or replicate that success in others. And so if you have an historical bench of founders that look a certain way, coming from a very specific type of background, generate some type of outcome for other firms, you're going to be like, oh, that's something that we should track against, that's something that we should follow, that is something that we should ultimately mirror. What that does is install this level of bias that doesn't favor underserved or underrepresented communities in pretty obvious and tangible ways, like the numbers have been kind of cited at this point. And so the fact that unconscious bias or bias at all is something that feels pretty significant in that benchmark study is not really a terrible surprise to me. The fact that access to capital is also an issue is also not a surprise, just because the hurdles associated with being able to be in the room, being able to access the folks that are deploying capital in pretty meaningful ways has been historically a challenged concept for various communities. There's progress being made, slowly, but hopefully surely, in a way to kind of course correct against that. But it's important to recognize that as an issue, as a little bit of a speed bump that deserves very specific attention.
Even getting more granular, you talked about being in the room. You know, what I hear all the time when I speak with founders is just how important the relationships are, right? And how making the relationships with the right funders, with the right fund managers is important. Bahiyah,
Lots to say
what can
about
you
that.
add about that?
Well, look, I mean, we talked about pattern matching. The asset manager layer is really important because when you look at total addressable market, right, when you look at these opportunities, we know that diversity outperforms the market. Why? Because it's diversity of thought, it's diversity of background, right? It's diversity of color. I mean, no one's a monolith. No one, organization or ethnicity is a monolith. And so we're really looking for that, inclusion to make better decisions on investments, right? And so when we're looking at 100 million or so, Black and Latinx or Hispanic populations that represent the U.S., if they're not folks that actually understand those markets, right, to understand the market opportunities, this is a massive market opportunity, then we're missing on alpha. We're actually, we talk a lot about fiduciary responsibility and, trust and trusting the market, trusting the people that you invest with, et cetera. But if we are not opening that lens, right, and that investment on the education side, on the investment side, on the asset management side, then we're missing out on those new market opportunities. And I think that's really important, particularly where we are in this innovation economy, this technologically driven economy that we're in.
Right, you have all spoken about what a unique market opportunity this is, and to the people in the room who may be considering investing in this market opportunity. Yes. Miriam, what would you tell them is the most important thing to keep in mind when they do take advantage of this market opportunity?
So one of the things that we should realize is that the majority of Americans are now people of color, and they are Latino, they are African American, they are immigrants or children of immigrants. A quarter of the Gen Z population has some Latino descendancy. So we really need to understand that if we're going to reach these customers, we need to speak their languages and we need to know their cultures. And I think that when I was at Google, for example, one of the ways in which we were successful was the fact that when you were hired, you were asked, what languages do you speak, read, and write? Because guess what? We want to be localized in the language of every site that we have, and we want to reach the consumers in a way that feels comfortable to them, even to the level where, as an attorney, I was helping them localize Google.pr for Puerto Rico, where my family is from, because Spanish is not the same everywhere that speaks the language. So I think that is one of the things that we really need to keep in mind, is that if you want to succeed both in terms of reaching consumers and the American worker, you really have to understand who they are and make a comfortable environment for them to be productive for you as an employee as well as a customer.
So let's go down the line of how each of your organizations are actually doubling down on those kinds of efforts. Miriam, we stopped with you, so let's start with you.
Okay, so in terms of, for us, for example, one of the things that we are really focused on is just actually deploying capital in diverse communities. And so, as I mentioned, about half of our teams have a woman on the team. And frankly, our women-led companies are actually outperforming all other companies in our portfolio, including white males. And obviously, women can be people of color as well as women. And I think that our diverse teams are also just much greatly outperforming even our traditional teams. And that's not to say that our traditional teams aren't successful, but for a variety of reasons, they may be able to access capital more easily. They may be able to raise at higher valuations, and so the return on those investments will just be lower. The Kauffman Fellows Research Center, for example, indicates that just having diverse founders increases returns by 30%, and if you add diversity onto the C-suite, that will increase returns by 60%. So we're also trying to educate our founders on the value of diversity from an economic returns perspective.
Very good. So let us know what your shop is doing.
So Include is actually a holistic three-pronged strategy to make sure that new majority asset managers and founders are growing at scale over the next 10 years. Our goal is to make sure that at least 100 new emerging managers are growing through the life cycle of their firms, so from a fund 1, 2, 3, and beyond. We believe that will have a massive market reach to diverse and women-led fund founders as well. And so we've got our training and education program that's kind of churning out 10 to 15 fellows that are raising capital as we speak every year. We just graduated the first 10. We are also advising LPs and asset allocators on their strategies to, double down on BIPOC firms like climate solution-focused funds and firms, as well as we're actually investing through Include Ventures in the best of our pipeline of over 500 fund managers. So have a lot to do in the next 10 years.
Sounds like it. Sounds like you've got a lot to do just in the next few months. And I'm sure you do as well, KJ.
Certainly trying to stay busy. So yeah, I guess I'll offer just a quick bit of context. So Forerunner is a VC fund that's looking to champion founders that are working or aiming to rescript culture, reimagine consumer-based experiences, particularly for this, I guess, contemporary, novel, digital age consumer. And so the efforts that we've taken as it relates to diversity is kind of what's been spoken about to this point, where it's an acknowledgement that the fabric of America looks a lot different now than it has historically, to the extent that our children of America, will know no ethnic majority, for example, right? And so when you take that into context and you work to effectively translate the notion of identity, who you are, what you do, how you kind of fit within a broader context or community, translate that notion into needs, those needs kind of surface different opportunities as it relates to businesses, both from an employee perspective, but also from a customer perspective. And so what we try to look into, what we try to lean into, is understanding those need states, identify those, and then match those with opportunities that work to satisfy those need states in ways that ultimately feel empowering or enriching. And so we back founders that are looking to champion that very notion, that ideal, because the expectations as it relates to one's identity and the ways that people need to show up in context for that has elevated to a pretty meaningful degree. And that creates alpha, that creates opportunity across a whole host of different dimensions. And that's what we as a firm try to lean into. And that's where we've identified like our mark within this broader ecosystem.
That's a unique perspective that you don't always hear about, needs-based. So can you tell us, the curveball here, can you tell us what's the most surprising thing that you might have learned in collecting these data?
Yeah. So our firm recently ran a survey in an attempt to understand the correlation or the relationship that exists between identity, affinity, and the ways that that shows up in consumer-based experiences. And I would say that there were two particularly interesting findings that I can kind of remark on now. The first of which had to do with the fact that as you consider the mosaic that contributes to someone's identity, right? Whether there's that ethnicity, their interests, their hobbies, what we found and what we noted is that those pieces that felt underserved in any capacity were the ones that people had the strongest anchor to. It was what tethered them to their experiences, and is what created or sponsored a bridge that related them to others. And in that context, we also found that there are certain categories of kind of consumer-based experiences with which that tether, that anchor into what that underserved piece kind of shone most brightly. Specifically, it was family care, personal care, and health, for which your identity kind of mattered the most. And so what was interesting around these findings is that, well, one, that they exist, right? And some of these pieces may sound obvious, but to be able to kind of put data behind it was something that felt like a pretty significant step in order to kind of articulate what our value proposition was going to be, but also what types of opportunities made the most sense in delivering value for our end consumers. And so when you kind of combine those, you kind of like surface interesting opportunities, one of which, for example, was an investment that we made last year by the name of Alchemy, which is effectively a healthcare institution or platform for people of color. The idea was that being able to deliver competent, culturally competent care was what was needed in order to kind of combat the institutional issues or disparities that exist currently across health systems, with an idea of starting on mental health as like one of the more pressing needs facing the Black community. And so it's only with that perspective that you get to identify those types of opportunities that exist out in an ecosystem and kind of develop the conviction to kind of make those committed bets to making sure that those types of organizations, those types of companies, and what they stand for can be durable and long-lasting in the broader market.
Absolutely, and thanks for those examples too, because I think they really do help people to understand even more, just why it's important to include identity in the calculus. And so we have identity of consumers, and then we have identity of the American worker, right? And so let's talk about that, Miriam. How has the identity of the American worker changed, and how does it fit into this conversation we're having today?
I think one of the things that we've seen is that the US population has just changed demographically so intensely over the last 50 years, and that venture capital just really hasn't kept pace with that, where it's like 85% white male, and white and Asian male for the most part, and then very few people of color in there. And very few women. So you're basically having a population that's trying to serve markets that they don't represent and that they may not understand or even appreciate the size of. And one of the things that we know is that the millennial generation and the Gen Z generation are the most diverse generation in American history, and that they have a much broader range of sense of identity when it comes to things like gender, their cultural backgrounds, linguistic backgrounds, and that they're much more accepting and welcoming, actually, of these things. And so we're just not responding to who is coming to work and who is actually buying our products.
Something else to think about. Now, you've heard how each individual organization is helping, but let's talk more solutions. And so, Bahiyah, I'm wondering what type of innovation is happening in the venture capital pipeline when it comes to ensuring VC funds go to diverse founders?
Well, again, our niche is women-led and new majority-led managers. What we're seeing externally is that there is, and we were talking about this at the beginning, a growing understanding of the need to invest at the manager level, and understanding that that's going to trickle down to diverse founders, whether specifically Black, Latinx. There's a lot of conversations that get into, well, are you a Black manager just investing in Black founders? I mean, from my perspective, the 30,000-foot perspective, it doesn't really matter, because we know that on par, they're going to, no matter what the diversity of the firm, they're going to just invest in more diverse founders. But I would say that allocators are starting to, and large corporations are starting to invest more in the managers. And so that's, to me, the most important thing, and the way that you actually, again, you scale kind of investment at the founder level.
But
so that's the end of, yeah.
I'm so sorry about that.
That's okay.
Thank you for explaining. One thing that I wanted to ask you about is the types of businesses. Do you see funds flowing more to earlier stage, smaller businesses, and why?
Yes, so that's a pipe. That's actually drills right down to the pipe, the correlation to the pipeline.
Yeah.
So because there's been such a juggernaut in investing into diverse founders over the last, say, 5 to 10 years, now that there's a flood of investment, actually a trickle. Let's just make it, let's be clear, not a flood. But now that there's a trickle of investment into the managers that are ready to deploy capital, a lot of the diverse founders are actually still early stage. They're pre-seed, late seed, even Series A. I mean, Miriam can speak to pipeline of there are very few diverse founders that have gone past a Series B, C, D. I mean, it's like thin air, right? And so the reason why there's a little bit of a juggernaut in those investments is that most more traditional and more white shoe investment firms want to invest in later stage, want to invest in private equity, want to invest in more robust businesses. But again, that pipeline has kind of been marginalized a bit. And so this is the first wave, right, of investment into the managers that are investing in the early stage, and we'll see in the next 10 years, which is why that scale is so important, those later stage companies start to mature and starting to exit.
And may I add something?
Sure, go ahead.
So one of the things that I think people don't realize is how little the numbers really are. So when we looked at the data between 2015 and 2020, we realized that in the United States, there had been fewer than 100 investments in companies that were led by African American and Latino founders. That's in our entire nation. And now that there's a flood of capital that has increased to 200
200. Okay.
in the entire United States. And then when we think about women, for example, who've raised, women of color who've raised capital, it's probably under 100 in the country.
Yeah.
So we're really in the early days of access to capital for diverse people in this nation. And you know, venture capital is one way that we want to get capital in different hands. And I also want to just amplify the work of other folks that are looking at revenue-based venture capital and new approaches to get capital in the hands of diverse people, because the small businesses of this country are really a huge potential source of well-being for everyone. So Stanford Latino Entrepreneurship Initiative, for example, says that if we could raise Latino small business to just the size of the average white business, that would be a $2 trillion impact on the US economy. Yeah. So we really need to get capital in different forms to different entrepreneurs.
That makes me think about what Arlen Hamilton is doing with Backstage Capital. And it's more of a crowdfunding approach that way. And I would, you know, suggest you guys just look around at which other ways people are getting capital, because as you say, these things are going to need to rise to the top. So folks, we're actually going to come to a close, but not before we get a call to action. We have to end on a call to action because all of you came here for that after all. And so tell me something. KJ, let's start with you. Yep. What can the executives here and who are watching online do to help further these efforts?
Yeah, I mean, it starts with intentionality, which is not something to be ignored or diminished. I think intentionality is extremely important, and then it creates a dynamic in which you can just work backwards. Start for where your intentions are, start with what you want to accomplish from a goal-setting perspective, and then figure out the baby steps, if you will, the lily pads that you can jump across to get to the other side of the lake that gets you from where you want to be from where you are. I think that intentionality component is particularly important, and I think that should be the North Star as you think about any type of initiatives, any types of plans, and making sure that anything that you put forward actually works to serve to move the needle.
All right, on to you, Bahiyah.
Sure. Well, include our franchise, our training nonprofit, our investment firm. Our advisory firm is here to work with whomever is ready to continue to invest in the next generation of alpha generators, like Miriam and KJ's firm. There are hundreds of them, and they are all, you know, doing incredible work and sourcing and selecting founders in particular regions, both in the U.S. and abroad. And so we're here to help, and we're here to accelerate and amplify the process. So we're excited to partner with those. I talk about a coalition of the willing. That's what we're building here at Include.
All right, and Miriam, you have the last word for today.
So one is, if you're investing in, you have an endowment and you're investing those endowments, make sure that you actually are investing in women and people of color in your pipelines, and change your policies if you aren't able to. For example, some will say we don't invest in firms that have under $300 million in assets under management, and they may as well just say we don't invest in Black people, Latinos, or women. So, you know, I've seen many foundations, for example, change their policies to change that. The other thing is, in your own organizations, invest in your people. We see women are not promoted at the same rate as men, regardless of their experience. We also need to pay them equally. And then in addition, I think we need to have more family-friendly workforce so that we can actually keep women and people of color in corporate America and get some of the training that they need to be able to successfully run their own businesses.
All right, I think that is a brilliant place to leave it. So KJ, Bahiyah, Miriam, thank you so much for joining us.
Thank you for having me.